Yeah.
What's up, everybody? This is Colin Dijs. I'm here today with Russ McFarlane, and we'll show you why native ads make so much money. We'll do an amazing screen share once more, while I'll pull up an Excel file and make some interesting calculations for you guys. So, of course, we all know that native ads can make a huge amount of money, right? It's a highly profitable business model, but why? The main reason is specifically reach, right? Reach meaning a tremendous amount of traffic available, traffic that you can buy and through which you can scale, right? So the only problem, which I know a lot of you all watching this struggle with, is getting consistently profitable, which is consistently like this, whatever.
You'll get there.
We are native advertising media buyers and not
Spelling police.
Yeah, not the grammar police. So this is not specifically to show you how to make the money, it is why you can make so much money. And to do this, we will write out some information for you. What is very cool, native advertising data 2020 or statistics. Outbrain, I'm actually looking for more of a reputable one like Statista. Obviously, you know me, you know I love to look at these graphs. This is native digital display advertising. So this includes native advertising as well as display, but it's about the upward trend. This is in billions of US dollars in the United States from 2016 to 2020. You can see a dramatic increase where before it has declined quite a bit. Now it's up and coming, growing basically into a fourfold over 4 years, which is amazing. We're talking about almost $53 billion in the United States alone in 1 year, right? Which creates a huge opportunity. Native advertising and display advertising are basically aligned, which basically in any way they destroy platforms like Facebook, TikTok in terms of impressions at the moment. Anywhere you go on the internet, you obviously have that. When we just recently looked at Google Display, we just checked it with Russ like an hour ago, and they have, let's say, 2 trillion ad impressions. So that's basically a different level. But this is display, right, and not native. But you get the idea, there's tremendous amount of reach. But how does it work? Why native ads make so much money? And in order to make a calculation on this, we write out some formulas. So it all starts off with the spend, right? We'll start off with the spend. How much are we going to spend, Russ?
Let's start off 500 per day.
500 per day in dollars. Okay, well, I always like these sheets to be centered. Okay, 500. Right, which traffic source do we run on? Doesn't matter, it's native. And let's say we run CPM, right? And we run on a bid of $5?
5, yeah.
Yeah, 2, 1. Okay, how many impressions would that get us? Is that 100,000? 1, 2, 3. Yes, 100,000.
Yeah, we're not the best.
Just checking if Excel is doing it correctly. Yeah. I don't want them to play us. Okay, now we of course have a very important one, the impression click-through rate. Russ, what do you reckon, 1%?
Yeah, 1%, yeah, sounds good.
So we take this one divided by 100 and we get 1,000 clicks, which brings us to CPC. Just bring this one down. Cost per click, 500 divided by 1,000, 50 cents cost per click. That's pretty good. Very good, I would say. Then we get click-through rate on the lander. How much?
Depends on what type of lander we are running. Let's say we are running, say, VSL lander.
Okay.
1 click
40?
through. Yeah, 40. Yeah, it's a good CPR.
400 clicks to the offer, and a conversion rate on the offer 5%?
Yeah.
2.5%.
Yeah, 2.5, 5%. Yeah, do 5%. Let's say we've got an absolute hot offer.
20 conversions. Payout?
Let's do $100.
Damn, then we're making a lot of money.
Yeah. Juicy.
$100. 2,000 ROI for, yeah. It's basically 4x, right?
Yep.
Right here.
Some nice numbers.
Yeah, good setup. Interesting. Okay, so now it's about reach, right? Where this is where the money is made. This is how you make the big money on native advertising. It's basically the opportunity for the reach, because your profit, let me just also write out the profit percentage here, is basically, so 1,500, right, which is really good. This would be 400% if we take baseline 100%, right? Okay, so now we're going to do this again, but the numbers will be different. So we need to take this entire row. So this is basically trial 1, right? And this will be trial 2. Okay, now the spend, we're going to push it 2,000, yeah, let's take it easy. The CPM obviously has to go up when we take more reach, right? We're not going to have like flat process, like it's linear. So supply and demand, if we want to buy more traffic, normally we would need to bid more, right? Let's say $7, yeah? Okay, just make sure that this is all even out. Okay, so now we get significantly more impressions, but not 4x, right? So we 4x the budget, but the CPM bid is higher, so we only get 2.8x. Make sense?
Yep.
Okay. Yet the ICTR, we can assume, becomes stable or declines a little bit at this stage, all right? Because you will have a frequency. Well, we can do a frequency cap actually. So just, so this is, let me just, to make the calculation easy and everybody understands, we'll do a frequency cap of 1. So the whole formula makes sense for everybody. Yeah, okay, so I need to move this one down once more because I missed this. There we go. Alrighty, so frequency cap 1, and therefore we wouldn't assume that people see the ad more than once, which basically means that if they don't see it more than once, the ICTR will be the same. Make sense?
Yep.
Okay, now because the bid has gone up, the CPC also has gone up, right? 1%, the higher spend. So based on the higher spend and the CPM increase, the CPC doubles. It not necessarily only has to do with the actual CPM increase, it does, but also the overall more spend based on the 1%. Because now if it would be numeric change, then would be this one times 4, you would get 4,000 clicks and now 2,800, right? So the CPM is the biggest factor here. Let me just check this. It's all correct. Yeah, the formula should be like this actually. That would be better, but it's the same, right? But 40% click-through rate, let's assume it's the same, right? 5% conversion rate, 75 clicks. And then, so the ROI here, I have to do it by hand. Let me see if I do the math correctly. So this is, this one is 100%. Let me see, this one times 100% divided by this one. Does that make sense? It makes sense. That's not correct. $3,500, not correct. That is correct. Yes. Okay. So now your ROI is less. Yes.
Yep. True.
However, your net profit has doubled.
Yes, correct.
More than doubled, right? significantly more. So if we're talking about profit ratio, right, which I think is important in this example, we're talking about 2.4 to 1, right, which is really great. That's 2.5 to 1. I like to be neat, so 2.48 to 1, which I think is an important metric here, so I'll highlight it. All right, so this is not really still real scale. This is a good campaign, don't get me wrong, right? Obviously, we took the best metrics possible, but it's still realistic. Now we're going to head into trial 3, which is, we'll do this like 4 times. So we can also do the number 4th one. So this is number 3. And this is number 4, right? So here we spent, let's say, how much you want to spend? 10,000.
Yeah, let's do it.
And here it will spend 25,000 a day, just for the perfect example. So the CPM bit here is 10, and here it will be 15. Right, significant difference. All right, so let's just follow the formula. Okay, so the ICTR here will drop, right? Because at this point, although the frequency cap is 1 for this example, let's increase it to 2, because otherwise, probably at 10,000 a day, you won't have enough reach. Just a plain example. So this will be not 1%, it will be like 0.7%. There we go. Basically goes like this. CPC, let's say in this example then, how can this be 1? It needs more numbers here. There we go. For this one as well. Yeah, okay. So you see the increase, right? The increase in cost.
Yep.
Then if all the metrics stay the same, right? Conversion rate, well, conversion rate might drop a little bit with such high amount of traffic, but let's say you get a payout bump or it equals out, whatever. Your ROI drops again by half, but we 5x the budget, so your ROI drops by half. Let me see if this is correct. Yeah. And then you have 4,000 profit, and the ratio has become less. Right? Okay, so now the question is, whether you spend 2,000 or 10,000, in terms of reach levels, it doesn't necessarily make much of a difference. You see?
Yeah.
The ROI is basically dropping to 1 almost. You see?
Yeah.
Okay, so just to make my point across, let's just make some relative adjustments. Turn this bit back to 1. So the CPC increases. Okay, so now you have a $15,000 profit. 10,000. Okay. Okay. Oh yeah, just because you're sending so much more traffic. All right. Interesting. Interesting. Good. Good. All in all, what we're then doing is we're moving deeper into the flow, right? So we're moving into 25. Let's say, let me adjust this to 9, 1%, CPC of 1. So the cost increase is linear, right? Let me take this one. So you can see the cost. So we assume that these metrics, so let me just highlight them, which they're never stable, right? But for the illustration purposes, we are keeping them stable. Yes?
Yeah, just to show all.
Yeah, because in theory, it would work like this. Some might go up, some might go down, depending on the adjustments you make throughout the flow, right? But this is how it would work. So what happens is, now let me give you a crazy example. So this one also would be 1 then in this example. So I said only 4 trials, but I'm going to add a 5th one. Okay, this is a good example. So in this scenario where we would have all these different trial runs, right? With different CPMs, the higher the budget, the higher the relative CPM. Let's assume that all relative metrics stay the same, right? What will happen is the CPM will go up, right? The CPM will rise continuously throughout the flow. Does that make sense?
Yes.
However, that would mean that your ROI automatically goes down because earnings per click, they stay the same, right? But relative numeric value in terms of profit goes up. 1,500, 3,700, 15,000, 30,000. However, in this example, it is 33,000. So when we say this is why native ads make so much money, it means it's because there's a lot of scale. It doesn't mean there's infinite scale. Yes, because here you get diminishing returns. Basically, you're spending 4x, but you only get 10% more ROI, right? Compared to this one. Where this one has a 7,000 to 1 ratio with the original starting point, I assume, well, it compares it to the previous one, which it shouldn't do. So it should compare, hang on. So it should compare this profit against this profit, right? So a 2 to 1. So you're spending 2.5 amounts the base amount, and you only get 2 to 1 return. So from a financial point of view, you can already see it becoming less and less interesting to do this, right? It might not be the right decision, the right move.
Yeah, depending on cash flow, yeah.
Yeah, so probably here you have the best scenario, a 4 to 1 return, 15,000 profit, and this is 10,000 a day. This is probably the most every year will come, right? Most people will not go beyond this stage of actual spend, because this is already insane numbers. Then the numbers into a realistic point of view, they will differ. And you want to see what that looks like?
Yeah, go on.
Because this is just theoretical, which we need to adjust, right? Because it might not always be as realistic. I don't want. Let me take two flows, because otherwise I'm going to make it super complex, which I like, but maybe the people watching this not like. This is my favorite thing to do, really, explain how these things work, because I just love these numbers, and that's why.
Yeah, that's why I'm staying quiet.
Maybe I'm a good media buyer.
That's why I'm staying quiet. I don't want to knock you off your flow.
Get me out of flow. Yeah. Usually when I start, stop explaining, listening, everything fucks up. But so far so good. Because this like illustrative purpose is really interesting. That although you have a lot of scale, especially now I'm going to adjust the variables, the orange ones, it doesn't necessarily mean that it's the right choice for the business. But this is, for example, an example of why native is so much easier to compete against Facebook, against TikTok, against Snapchat, all these other platforms that are great in their own way, right? There's nothing specifically better, but the reason why native ads make so much money, once you have profitability, is the amount of reach available. Because if you can spend more money per day, you keep the flow consistent, you have a tremendous payoff, even taking in consideration the increase in cost. Now, display is this, but times 10. So it's even more ridiculous with 2 trillion ad impressions on Google Display Network alone per month. That is an infinite. Let me check. YouTube ad revenue 2020. Just of YouTube ads. I read it the other day. I couldn't.
Yeah, was it not 1.6 billion?
Yeah, they bought it for like.
Or 1.6 billion. Yeah.
1.6 billion. So in 1 year they had their complete return.
Yeah.
It was also YouTube ad revenue. 19.77 billion. So they bought it for 1.6 billion. So in 1 month, in 2020, they made their initial. Obviously, they did very hardcore monetization with like the double ads, in stream, all these new things, which are extremely cool. Google did a great job, but this is obviously tremendous. Very well done. Good job to them, and we benefit.
The thing with this example that you're showing as well is this is just vertical scaling on campaigns. Like you can horizontal scale this as well, like on different ad exchanges, like taking a proven funnel.
A lot of opportunity.
So much, there's so much reach on different ad exchanges and stuff. So like,
let me take this as an example. Yeah, to keep the baseline the same. Okay, 3,000 profit. Yes. On a 1,000 ad spend with these metrics. So these are obviously great metrics. Yeah, but these great metrics, they're not usually as consistent, which I'll show you right now. Let me just keep this. Okay, so now you go from $1,000 a day to $5,000 a day, right? Realistically speaking, I would assume you go from like $5 CPM, 5x to maybe 7.5. That would be a decent increase. Let's say the ICTR, because we need to up the frequency cap probably to 2, maybe even to 3, your ICTR drops to, let's say, 0.8%, right? Which is then this amount. Okay, so now your CPC almost doubles. It's just a truth, right? Maybe it goes even higher than this. Your CTR drops, it goes to, let's say, 34%. I'm just typing some random numbers here, but based on experience, obviously. So your conversion rate, it might stay the same, it might not. Let's say it drops to 4%, minus 1%, right?
Yep.
But you get a bump, right? Because you shoot so many impressions on a daily basis, they don't pay you $100 per conversion, they pay you 125, right? So you basically, in this example, your ROI here is 400%, which is 3,000 profit, 4,000 revenue to 1,000, and here it's 9,000 to 500. So your relative ROI goes from 400 to 180, where your profit 3,000 compared to 4,000, right? Not as significant. The relative increase is lower. Now, let's make some, because this is hypothetical, yes? Let's make some real indicators, which I think are good for you guys to see, because they are real indications based on what you actually might really expect to see from a campaign, which you might actually go through when you're actually upping these numbers, right? So when you have, let's say, this is not in a percentage, let me go back. Okay, $12, then $12 CPM would give you about 8,333 impressions, right? Then the ICTR, what happened here? This is the clicks. I just need to remove these numbers real quick. If I do that, they adjust everything. See, that's why you love or you hate Excel.
I know why. I know why.
There's no in between, right? There's no in between right there. Okay. So then your CTR, all good. Let's keep these metrics the same, but you would have based on this ROI is not even a formula at this point. Okay. So this is 167%, but based on net profit, it is 67%. Of course, 100 is the base, right?
Yep.
So 1,666 to 1,000. 167%, but 1,000 is the base out of your revenue, so the profit 67%.
Yep, still insane.
Yeah, can also do this, make it easier for you. There we go.
Yeah,
mathematical genius.
Mind blown.
Right. So in this example, you would probably go to a $20 CPM, right? Let's assume that these metrics they stay the same with $5,000. Then 1%. I have to make some adjustments here. The CPC is then 2. CTR, let me just switch that back to what it previously was. Conversion rate to what it was, payout to what it was. Times 100. Okay, profit is break even, actually. So in this example, the bid would have to be lower, even with all the same variables. So the CPM bid can never be $20. It would have to be something around $15 probably, and you would make a profit of 2.5 to 1 ratio, right? With $1,600 is still good. This is just where competitiveness comes in. The reach is there, yes. The tremendous amount of traffic is there. According to the hypothesis of you dominating the market, finding the right sources and finding the right traffic sources, there is infinite scale with almost, I would say, 4 out of 5 levels of consistent profitability, right? And to an extent where you cannot experience this on most other traffic sources. However, it is not unlimited, which is trial 5, right? When ROI goes down. Per this example is if you cannot compete on the CPM bid, the traffic is simply too expensive. You cannot increase your metrics, and this is already a positive scenario, then when the bid becomes too high, so 16, we're making less profit, 17, we're making less profit, 18, we're making less profit, 19, we're almost making no profit, 19.5, 19.6, 19.7, 19.8. That's the break-even point, is literally literally on 20 is the break-even point. Yeah. 19.9995 is still break-even. 7. So 19.999 is break-even, right? So if you will go to 20, you're still on break-even, but 20.1 is already minus 25 bucks. So yeah. $20 is your break-even point, which is basically, yeah, between 19.9 and 20.05. That there's obviously other metrics to engage there, right? The reach is infinite, but you need to be strong with your numbers, strong with your ads. What is great that on an ICTR campaign, which is then CPM, right? When we put the focus on ICTR, you can compete. Basically, the CPC price is dependent on your ICTR. So if you get this from 1% to 2%, right? Even with a 20% bid, $20 bid, look, bang, 5,000 profit, 100% ROI.
Doubling your clicks, yeah.
Yeah.
Yep.
So this one is not 200. It is base. Is base divided 100% ROI. Juicy or not?
Yeah, super juicy. I think that is the beauty. that is the beauty with native, isn't it? Like if you know you're a good media buyer, you know your numbers. You can optimize. Like if you know you can boost that ICTR up. It's just a matter of testing, rinse and repeat, rinse and repeat.
That's all it is, really. Find the system, find the flow, get the structure properly coherent, and then take the deep dive. But understand the amount of reach and the amount of money that could be potentially made, disclaimer, could be potentially made, if you have a good, strong flow. The flow, that is what is everything. The reach is there, the opportunity is there, and that's why we're so strong and big on native, because we dominate that specific space by having a full understanding. And I hope by letting you into this Excel, showing these examples, you now have a proper understanding too. If you have any questions about any of this, because I can understand this was quite an intense training, feel free to give your comments, feedback, likes, subscriptions, all down below. Ross, thank you so much for being here, being my assistant today. Thank you guys for watching, and we'll see you guys in the next one.